Another Smart Silver Stacker live stream. Going to talk about the price action that we're seeing in the gold and silver market today. Both of the metals back in the green, but we have got gold, silver back up over 24 bucks here on this chart, courtesy of SD Bullion. Gold stubbornly trying to take out that $2,000 level, trying to get back up there, but it is considerably in the green, getting very close to 2,000. So is this pullback over? That's kind of the question, I think, on precious metals investors' minds right now, and I think there's some indication that it probably is over. Probably getting ready to kick off another leg in this precious metals bull market. We'll talk about that. There's also a factor that could lead to some significant pain tomorrow, specifically. We'll get into that. I'll be giving you my take on, how long this pullback might last, what could drive the metals much higher. Also, we're going to get into a gold forecast. Some Wall Street analysts now calling for $3,000 gold. And we're going to go over that forecast in detail. I'm going to break it down for you because it's a pretty interesting forecast and it touches on some very pertinent points. So if you are tuning in, thank you very much. Welcome to the Smart Silver Stacker live stream. Please do smash that like button. Help get this information out into the algorithm. And with that being said, also, we're going to do a little geopolitical update here at the end. That's the World War III aspect, because a lot of this forecast for $3,000 gold has to do with government spending and fiscal policy. But I think that ultimately there's a global conflict on the way that we're getting very close to, which is going to be a lot more costly than any of the existing spending. And we are already spending a tremendous amount of money. So it is really going to throw the global financial system into chaos when that happens. And I think we're getting close to that day. So we're going to do a little geopolitical update. With that being said, let's get into this pullback here real quick. So if you've been watching the channel for a while, you knew that I was calling for a pullback back when gold was over $2,000. I had forecast that it could get fairly low, and it wasn't really myself. I mean, I was looking at some of the forecasts by analysts like Clive Mond, and then a big thing that I was examining was the commitment of traders charts for silver and gold both. And this is an important technical indicator. Essentially, when the commercial positions get too short, like we had at this extreme reading about 2.5 weeks ago, and when the long positions get too long, you got to look for a correction in the price of the metals. That's how the charts have worked, at least for the past couple of decades, fairly reliably. And we had reached a very overbought position there. So we were due for a pullback. Now, as you can look at this updated chart, the commitment of traders has gotten a lot less overbought. So I think there is room now for gold and silver to remove, I'm drawing a blank here for the word, but resume their move upward. So I do think that now, based on this chart and just looking at the overall situation, it's possible. What's responsible for this rally, at least from what I can gather, is that it's the news of the debt ceiling, which, that would indicate that there's going to be more spending. And it isn't even the debt ceiling getting raised, actually, with this deal. All they're doing is suspending it. But the idea that the debt ceiling is going to get suspended, and that could drive a lot more spending, and that will be inflationary. So I think that there's that. Also, tomorrow, the factor that I think could reverse this rally that we're seeing in the precious metals market is the job report. The non-farm payroll numbers come out tomorrow, and if those are significantly better than expected, I think we could be in for some pain. Someone in the comments there said gold will never hit $3,000. Well, they say never say never. I always find comments like that interesting because, will gold hit $3,000 in my lifetime? Well, assuming I live a normal human lifespan, I'm fairly certain that it will. And the reason that I say that is because the downward trajectory of the dollar, along with all fiat currencies, remains in effect in perpetuity, right? Like, never do fiat currencies get stronger over time. So yeah, gold will hit $3,000. The question is when, and the forecast that we're going to go over today indicates that it might be sooner rather than later. Another thing that seems to be driving this rally in the precious metals is the anticipation of what the Fed is going to do next. As you can see here on the CME's FedWatch tool, the anticipation of a pause at the next FOMC meeting in June is on the rise. Yeah, well, listen, Josh there in the comments, he's saying that gold's never going to hit $3,000. The Fed's going to keep hiking. The Fed probably will keep hiking even if they take a break in June, which is looking increasingly likely. Maybe they'll resume their rate hikes later in the summer, but not if there's some kind of a financial crisis, and that is what I believe will ultimately be on the way. Now, will it be here by the end of 2023? I don't know. I don't have a crystal ball. But I do think that when you look at the numbers, and we'll examine some of those today, that it is almost guaranteed that we are headed towards a massive financial crisis. Now, keep in mind, before we go on to the next slide here, the next page, that we are already in the midst of a financial crisis in 2023, larger than that in 2008. I mean, the deposits, the banks that have failed so far in 2023 exceed the 25 odd banks that failed in the last financial crisis. So, we're not even halfway through the year. No, we still got a little ways to go. And already we're in a massive financial crisis. So, to think that the Fed can just keep hiking indefinitely and never return to stimulus, I don't know. I mean, I hope you're right. I hope that, they rein in inflation and everything's great. I'm not so sure about that, though. If I'm, betting, that's not necessarily what I'm putting my money on. And as you can see, I'm not, because I'm stacking physical metal, because I think that a financial crisis is coming. And when that happens, this stuff, whether it be goldbacks, goldbacks, probably I'm going to see the numbers drop, start talking about goldbacks, the most divisive form of bullion out there. But no, I mean, I don't just have goldbacks, but they are cool. Anyway, let's see what we got here. So this is the story. The U.S. debt ceiling debate highlights U.S. fiscal imbalances and supports gold's push to $3,000. This is from Cross-Border Capital. So some analysts over there in Wall Street. And the gist of this is, we'll read a little bit of this. There's a couple of key points here that I want to touch on that they are encompassing into this forecast. First one here is that if investors' concern over the often fraught and protracted debate between Treasury and Congress extends to a future failed Treasury auction, surely the US dollar would skid and gold prices soar. This is a key risk. The bottom line is that rapidly deteriorating fiscal arithmetic generally across the advanced economies threatens faster inflation. Now, what are we talking about there? What are we talking about with fiscal arithmetic? Well, a big part of that, we'll come back to this article to touch on the rest of that stuff, but the national debt clock here, we talk a lot about the U.S. national debt, $31.8 trillion. Surely that is an enormous, staggering number, but the big one here is the U.S. unfunded liabilities, $188 trillion. I mean, just about to hit that number. So that includes programs like Social Security, Medicare, other federal entitlements. And I know people who collect Social Security get upset, or even people who've paid into it get upset when I call it an entitlement. It's not in a pejorative term. I mean, it just fits the definition of a government entitlement program. I'm sure the chat's about to blow up, because that's always a touchy subject. I mean, I know everybody gets very attached to their government benefits, but the problem is that, there's more of them that the government has committed to than can ever be paid. I mean, $188 trillion. That's also, federal pensions. Lots of stuff gets lumped into this unfunded liabilities, but they're going to have to pay for that somehow. And I mean, the way that they're going to do it is they're going to keep raising the debt ceiling and keep borrowing more money. And ultimately, that debt will never get paid back. It will get monetized by the Federal Reserve. That is very likely how this scenario will play out. I mean, I can't think of a single time in history when the government has rung up this kind of obligation or this kind of debt and actually managed to pay it off in real money, in money that had any purchasing power whatsoever. So yeah, ultimately that's going to be the thing that drives the precious metals much higher. I mean, I think this $3,000 forecast is fairly conservative, but you start putting higher numbers on it and you get called a kook. So $3,000 is, what they're calling for. Although that would be a big move up. If gold were to hit $3,000 tomorrow, pardon me, that would be a new all-time high in real terms. The inflation-adjusted all-time high is somewhere right around that level, I think, just over $3,000. So you'd be getting very close to all-time high in real terms. But I do think that that may very well happen. And towards the end of this live stream, we're going to get into some of the reasons why I think it could happen, like spontaneously, kind of overnight. You could see a huge run up in the price of the metals. But moving on, I do want to touch on something else I mentioned here. We are moving into an era where central banks may have no choice but to create monetary inflations to fund future structural fiscal deficits. These deficits in turn result from escalating mandatory spending demands and tax bases ravaged by new technologies and the changing mix of the labor force. Excuse me, it's a long statement to read there. And then they say at the same time, the luxury of being able to co-opt foreign savings to help domestic funding looks less likely given growing geopolitical tensions. Yeah, and so that is exactly why it's important to touch on this World War III topic and why this is getting so bad. But let's talk about the fact that they're going to be facing competition from foreign powers. Yeah, so China here has a huge number of U.S. treasuries. You can see this is kind of weird, the formatting here on this chart. The point is they're the number 2 holder of U.S. treasuries, and they have been unloading these things at a record pace. And so now, the treasury is going to have to compete while trying to sell all this debt with the foreign holders of U.S. treasuries who are going to be selling them at the same time. This is the total assets of the Federal Reserve. And so, they're also likely to be a competitor to the Treasury. I mean, at least the way that they have this set up, they've been creating this tremendous balance sheet here. You can see trillions of dollars. This up here, this little tiny decline, represents the quantitative tightening program that they've implemented. And so that is, ostensibly a competitor to the Treasury. They're selling treasuries into the market at the same time the Treasury is going to be trying to sell a bunch more debt into the market. That is going to drive rates way up, and we know that the system can't withstand this. So this program here ultimately, I believe, will be forced to come to an end, this quantitative tightening program, and they're going to have to come back into the market as the buyer of last resort to stop that spike in interest rates. But so anyway, that's that forecast for $3,000 gold. Now, let's move on to the World War III aspect of this, because this means that all those foreign holders of U.S. treasuries like China are probably going to be dumping them at a much more rapid pace when you see headlines like this. Taiwan in talks to be brought under U.S. nuclear umbrella. This from realcleardefense.com. So you can just imagine how escalatory this is when a country like Taiwan, which China believes to be part of its sovereign territory, in which we're facing this conflict under, when their ministers start engaging in conversations with the U.S. to be brought under their nuclear umbrella. And, something like that's not going to happen overnight. Probably a fairly long process to bring a country like Taiwan into that kind of an alliance, but just the mere fact that they're discussing it is very escalatory in terms of the conflict with China. Now, we've also got this story, since we're focusing on the Asian theater at the moment. Evacuation alerts and sirens caused panic in Seoul after North Korea launched. So the North Koreans had announced that they were going to be launching a satellite or something like that with an ICBM. And when they did it, it triggered these air raid sirens in the South Korean capital of Seoul. And text alerts went out saying that there was an imminent war and that this was going to, be like an evacuation alert, like get out of the city, go to your shelters. People panicked. It caused a big uproar. It's kind of unusual because the North Koreans are launching stuff all the time, and typically the South Koreans just kind of endure these things and ignore it to some extent. But this time there were these alerts sent out. So it kind of makes you wonder, was it intentional that this was sent out? Was it a test? Or are there just hair triggers on these alarms now because things are getting so much more tense between the US and China and North Korea in the mix? Kind of makes you wonder, right? Now, moving to the Eastern theater here, or I guess the less Eastern, the European theater, Eastern European theater, we've got drone attacks in Moscow on these various buildings. I guess there were drones that were sent to attack some kind of a luxury neighborhood where Vladimir Putin maintains a residence. So I don't know. I mean, what does that mean? There's a lot of speculation as to what's going on here. Is this a false flag? Is this the Russians, attacking their own city to try to make it look like it's some kind of a false flag provocation? Are they trying to frighten the Russians, the Ukrainians? Perhaps there's an element within Ukraine that is trying to, escalate things. But regardless, clearly this represents an escalation. That this is just kind of being normalized now. These attacks on Moscow itself. Also, we have got Russia moving ahead with the deployment of tactical nuclear weapons into Belarus. I'm not going to say too much about this one except to say it's a clear escalation. And then finally, another one involving Belarus, because this is really a clear sign, I think, that this is going to escalate significantly. We've got Russia delivering S-400 anti-aircraft systems to Belarus. And the notable thing here is I have heard that these S-400 missile systems, they're being stationed not on the southern border with Ukraine, but on the Polish and Lithuanian borders to the west. So, regardless of your stance on this conflict, whichever side you take, I know it's a very divisive thing. The key takeaway here is that it's escalating, and that's not a great thing because this could draw NATO into a broader conflict in the Eastern theater there in Asia. I mean, the Taiwan thing is a huge powder keg. And, if that goes down, we could be set back technologically. A lot of things could be very difficult to get. But the moment any of this stuff escalates in any significant way, because all of this is just brinksmanship and kind of setting up the powder keg at this point. But the moment that, a U.S. plane gets shot down somehow, or a missile crosses over that border and accidentally detonates inside of a NATO country, or perhaps intentionally, I mean, who knows, right? But it's not good when all of these chess pieces are being moved in this manner so that things are potentially going to escalate. And it doesn't take much when you look at this situation to realize that we are perhaps, one event away from World War III. And it doesn't necessarily mean that we're going to get involved in some kind of a, strategic nuclear conflict. God forbid that happen. But the effect that this could have on global financial markets, because they're all kind of operating right now as if everything's fine. I mean, oh, we're going to raise the debt ceiling. That's the thing everybody's focused on. Oh, good, we can borrow more money. We can keep going along. But for one thing, if war breaks out, that's going to mean that the national debt is going to absolutely explode in a very big way. And also that, in terms of the global financial system, the petrodollar system, China buying U.S. Treasury, I mean, kiss all of that goodbye. It's done, over, never coming back. And the unipolar world order will be over. Even if the U.S. is victorious, it's going to be very inflationary. And so, maybe Greg Palmer saying, I agree, but not as quickly as you think. Yeah, maybe this could play out over the coming years. If you're a student of the fourth generational or generational theory, the fourth turning, all that stuff, that puts the culmination date for all of this in the year 2026. But that's cutting it kind of close. So you might want to start getting prepared. That's all I'm saying. And just stay safe. Do what you can to get prepared, get into some hard assets. None of this is financial advice, of course, just sharing with you my thoughts. But thanks for tuning in today, everybody. Stay safe out there, happy stacking, and I will catch you next time. Smart Silver Stacker